Hello, I'm Emmy Victor, host of our series, Investing in America, sponsored by the American Investment Council. Thanks for joining us as we unpack the mysteries of the private equity industry. Today we explore building better businesses, and we're honored to be joined by Steve Klinsky, the chairman of the board of the American Investment Council and the founder and CEO of New Mountain Capital. Steve, it's really great to meet you.
Well, thanks so much for having me on the show, Emmy.
Can you tell us a little bit about New Mountain Capital?
Yes, New Mountain Capital is a private equity firm that I founded about 20 years ago. What we do is buy good businesses and safe industries and then really work with the company to build the company. So the name New Mountain comes from building new mountains in the industries where we invest. And it's all about bringing skill and capital to a company and building that business.
Can you explain to our viewers who may not know how a typical private equity investment works?
Yeah, private equity is just a form of management where private equity firms are teams of managers that are provided with capital by their investors, who are generally the big pension plans, the university endowments, and so forth. We take that money, buy a company with it, and then provide our own management and work with the management of the business to build that business. So it's very equivalent to, say, if we were in real estate and we bought a building and we then spent years fixing up and improving the building. That's what we do with businesses. We buy a business and then we spend years improving it, making it better. And the gains the vast majority go back to the workers' pension plans and the university endowments and the other investors.
So every year, New Mountain Capital releases what's called a social dashboard report, and it measures the positive effects that New Mountain and its portfolio companies have on job creation and investment. What are some of the benefits of New Mountain Capital's investments?
Yeah, if you buy and build businesses, you're going to have good benefits for society. And there are 5,000 private equity firms owning 30,000 companies. We're just one of them. But for our own firm, we've added or created over 46,000 jobs, net of any job losses, over the last 20 years. We've paid way more than the national average. We've never had a bankruptcy. We've never missed an interest payment in the history of the private equity firm. We've generated about $35 billion of gains for all shareholders. And again, the big beneficiaries are the workers' pension plans paying their retirees and other good investors. So, if you build a business, it's just positive for society, and private equity can do it privately for multiple years rather than under the 90-day pressure of public companies. So it's just a good, smart way to own and build businesses.
And with that being said, what is the best example of a private equity success story that you've been involved in?
Yeah, we've had actually, fortunately, a lot of good examples over the last 20 years, but one that's current now is we own a business called Avantor. We bought it about 10 years ago when it was called J.T. Baker. It started at 290 million of value, and today it's worth over 15 billion. It trades on the New York Stock Exchange. It's just being included now as one of the 500 largest companies, on the stock market. And it's had major growth in value. The number of employees is much higher. They work around the world, and they've gone from a little company selling laboratory chemical to the leader in ultra purity life science supplies around the world. So it's been great for the company, the investors, the workers who benefit from the investment gains. It's just been a great business building story.
Steve, we've talked a lot about how private equity benefits businesses, but returns from each investment do so much more. A few examples: they support public pensions, university endowments, and charitable foundations. So who would you say are the biggest beneficiaries of New Mountain's successful investments?
Well, that's exactly right. Those are the investors behind the money, and they're the ones who collect the vast majority of the gains. So put yourself in the shoes of a big state pension plan. You're trying to make 7 or 8% return every year so that you can pay your retirees their benefits. The government bonds yield about 0% these days. So to make that high 7 or 8% return every year, they need asset classes like private equity to generate returns. We've actually been the highest returning asset class for the public pension funds for many years, and with less volatility and downside drops than the public stock market has, which can crash in any given quarter. We've actually been steadier than the public stock market and higher returning. So it's just, it really does benefit pension plans, universities, charities, and others who invest in the asset class.
And with all your years of experience in the industry, are there some misconceptions about private equity that you'd like to address?
Yeah, I've actually been doing private equity for 40 years and had my own firm for 20. And it's still not a well understood area. I mean, people still confuse private equity and think we're buying a share of stock like a stockbroker or selling a share of stock, or that we're a hedge fund buying and selling shares but not working with the business. Private equity is a form of management where we actually own the company. We set the strategy, we put in the management. It can be from our own team or the managers who are already there. We build the business in every way over a long number of years. But we do it privately. We're not on the stock exchange under 90-day pressure. We're doing it privately like a family business would do it, but a very merit-based structure. So it's just a great, smart way to own businesses, build value. And if you do that, you're helping the company, you're helping the people who work at the company, and you're helping the pension funds and universities and other who invest in private equity as an asset class. So it's just a good, smart way of building businesses.
Great perspective, Steve, and we really thank you so much for taking the time to talk with us.
Well, thank you very much for having me.
And I hope you'll all join us next time for our series, Investing in America.